Hey everybody, my name's Todd Embley and welcome to another edition of the Negotiation After Hours, our new video series where we speak to WPIC Marketing and Technologies co-founder and CEO Jacob Cooke on the top consumer, tech, and business stories from China and other APAC markets. Jacob joins us from Vancouver. Jacob, welcome back.
Thanks, Todd.
All right, last week in Vancouver, how's the trip back home been?
Yeah, it's been great. It's been great to get the extended amount of time in our Vancouver office and anxious to get back. But yeah, it's been really, really great. Obviously, you know, was unable to do this with COVID. So first time in a couple of years, I was able to get in this office for more than a month. It's been great.
Yeah, and the weather looks fantastic. Beautiful blue sky behind you. Love that Vancouver architecture. In the last 2 weeks, several of China's tech majors have reported their quarterly earnings. Tell us about the results and what your takeaways are.
Sure. Yeah. I'll start with Alibaba, which reported last week. Alibaba had really strong earnings with revenue up 14% for the quarter that ended in June. That was well above everybody's forecasts. So, not surprising for us. But for me, I think the most significant metric in the earnings report was the revenue from Alibaba's domestic e commerce unit was up 12%. That's right in line with what we were expecting. And that unit, right now is now the Taobao and Tmall group. Which has been severed off. But as it's still part of the group, that's half of all
Mhm.
of Alibaba's revenue coming from e-commerce. So obviously, substantially significant to their overall revenue. That 12% increase is huge, really huge for a company that size already. Um, Daniel Zhang, I think, said it best that Alibaba's results reflect the economy's resilience and confidence in consumption recovery, because this isn't certainly the only data point that we've seen that backs up these numbers. The second takeaway, I think, is Alibaba has put itself in a strong competitive position to capture that ongoing consumption recovery. A big story of the last couple of years has been the rise of Douyin and PDD. Douyin with social commerce model and PDD with extensive discounting. I think in response, Alibaba's invested big in user retention, loyalty programs, content, like we've talked about on the show before. And the quarterly report, I think, to me, made it really clear that those investments are paying off. Taobao daily active users were up 6.5% in June, which is significant. That also contributed to a very strong 618. And that in turn, drew in more ad revenue. So Alibaba reported, I think, the members of its 88 VIP program were up by double digits this year, as was the GMV from program members. I mean, that's just incredibly positive, and it just shows that China's consumer market has matured. And for several years now, platforms have been focusing on sustainable business development. Customer loyalty programs is a key pillar of that effort. And Alibaba seems to be at the top, if not even winning that game. Final takeaway is that it seems the ongoing reorganization has injected a lot of energy into the company. I'm looking forward to following the developments in AI, which we're going to see some pretty exciting stuff as well from next year.
Yeah, we definitely will.
Yeah.
What about JD.com?
JD reported this week and also beat forecasts with Q2 revenue up 7.6%. I think the big story of this year, obviously, was the 10 billion renminbi subsidy program that they launched in March. Investors didn't love it at the time, but obviously it seems to be paying dividends now, bringing a lot of customers back into the platform that were sticky in Q2. So I think JD's low price strategy positioned the company well for an environment where consumers are still price conscious coming out of the pandemic. I'm not sure if that's going to hold well in the long term, but either way, it certainly could. Um, but the low price strategy, coupled with service and logistics advantages, I think has really broadened the user base and made the platform a preferred choice over PDD and, in the 3C and appliance verticals.
Okay. So we've had these positive earnings, but the market hasn't exactly rewarded these two stocks. So what's going on there?
Well, I think if you look at, first of all, Alibaba is up this year significantly as a stock. It didn't reward it at the time. I just think that probably a lot of analysts are looking at this. They see the other data from companies like ours that saw that consumption recovery in advance. So really, we can probably expect that this was already priced in. Yeah, but the stock's actually having decent years. So I think that's probably okay. Let's keep an eye on it in a couple of months.
Sounds good. We'll come back to that in a couple of months. Again,
Yeah.
thanks, Jake. Thanks, everybody, for listening. We'll see you next time.
Thanks, Todd.